We're going to get the spoken word on something affecting income investors with our chief equity strategist, John Blank, who's here with me right now. So people who want to invest for income, John, are facing a particularly tough challenge, you're saying, right? What is that challenge?
Well, Terry, here's the facts. The PIMCO Total Return Fund, which is the largest bond fund out there, diversified bond fund, is down 3% this year to date. And if you look at the Vanguard Income Stock Fund, it is down 1%. Mm-hmm. So what is happening is income funds are tracking down the movement down in the bond funds, and that is putting a weight, basically sinking you. If you think you're going to be conservative in this market and get away with it, you're going to lose money. And that is going to happen as long as the Federal Reserve continues to talk about tapers or taper, mm-hmm. and we continue to see the 10-year Treasury rate move up or stay where it is.
So you wrote recently on our website that pure dividend payers are getting sold in bulk. When did that all start?
That started in May, Terry. It started when we had the first whiff of a taper coming out of the Federal Reserve. And what happened is we saw an immediate backup of 25 basis points in the 10-year that day, and then now we've gone up 80 basis points. That 80 basis points is translated into a 3% move down for the PIMCO Total Return Fund. So what you think about is there's a 4 to 5 to 1 ratio between the returns and the movement in the interest rate. So if we get another 1% move out of the 10-year, that's a 5% move down in your income funds. And that is going to kill anything you get out of an income fund when you have a 3 or 4% dividend you're trying to chase.
So what should income investors do then? What's a solution for them?
The solution is that you have to look underneath your dividend to dividend growth that's being driven by strong earnings growth in that company. For example, I own myself a Fortress Investment Group, which has got a 3.5% dividend. Mm-hmm. It's a global hedge fund. It can perform and get a 15% earnings growth. It has a Zacks rank of 1 as a result of that, and I earn a 3.5% dividend, which is strong. But so what I'm really saying is I'll pick up the dividend, I'll wait for the catalyst out of Fortress whenever they get their next set of returns in that deliver on that. Maybe what our forecasts have are right or not, but that's the kind of dividend investing you have to do. You have to look underneath for growth in earnings that's at least 10 or 15% a year.
So you have to be a little bit more diligent in trying to uncover those opportunities.
That is absolutely correct, Terry. Much more diligent. You cannot just buy at face value. Gee, this is a REIT, it's going to pay me 5%, I'll stay with it. If the REIT's not going to grow more than 3 or 5% in earnings, it's going to get killed.
At some point during this market run, let's say, will income investing just become not profitable at all?
Yeah. I think so. I think that is the point of the PIMCO Total Return Fund. If this continues, you're going to see negative returns in your bond funds, in your income funds, and anything like them. And that is the message, that you really have an issue if you're going to be conservative at this stage of the market.
So this is something that has to be kept on watch, right?
Correct. And the Zacks ranking is the solution for you. Going into the Zacks ranking income tab, mm-hmm. and starting to get a feel for what is well ranked because of earnings growth, but still delivering the income is the right place for us to send our investors.
Okay, well, thanks for the solution to that. Hopefully it doesn't get to the non-profitable stage for investors. That's the spoken word, the latest spoken word from our chief equity strategist, John Blank. Until next time, I'm Terry Ruffalo.